Good evening and welcome to the India Market Review for the week ending Friday, 17th February 2017. It's been a pretty good week actually in quite a few ways. Received quite a few emails this time from a few folks from the previously or the just finished EQNS group, some from the IMR subscription folks, and some folks from the mentorship guys talking about the money that they made in the week gone by, and it's been very hearty, very encouraging news, and quite a lot of that, or almost all of that, was in one way or the other based on the calls and the reviews that were done in the India Market Review last week. And so what we're going to do this week is in the part 2 of this IMR quickly review some of the calls given last week and what went right and also a few that did not really go the way they expected. And those of us who traded indices, well, that we'll review in this session as usual. So the theme for this session or today's IMR is, as we know, after almost 1.5 weeks of sort of sideways consolidation with a threat to go down on Thursday, the market jumped up today with a pretty good gap up opening. However, could not sustain that. And while we made not new life highs, but new highs considerable new life highs, breaking important resistances at open, we could not somehow sustain that. So the question is a new life high on the Nifty at all coming, and what are the chances of that happening versus are we seeing some sort of a topping out formation that is going on? So that'll be one theme, and the other one in part 2 of the session will be to look at some movers and shakers that moved in the market today specifically, and to look at whether they are good trading opportunities both on the long and short side for the coming week. Right? All right. So with that, let's jump in and look at how the Indian markets did. So looking at the NSE 50. So this is the whole point of the NSE 50, that we are probably just about 200 points shy of the life high, right? And after going sideways for 1.5 weeks, Thursday we broke down through this downtrend line. Wednesday, Thursday we had a green candle, and Friday we did this today. This massive gap up of almost 888.3 close. Yeah, so more than 110 point gap up, and then we just could not sustain that, and then we have corrected. Right? So we basically want to know whether we are on track to make a new life high or not. If you look at this on a weekly chart, you're looking at a pretty nice what we call what doji is this? Rickshaw man doji, right? On a weekly chart, very significant. So in the previous week, we had a sort of smaller dragonfly doji. In the weekly chart, you can also see that the upper Bollinger Band has clearly gone flat sideways, and so has the downward, the lower Bollinger Band. And the market, from that perspective, is clearly on the sideways side. Having said that, everything in the indicators, nothing in the indicators rather, is really negative. We've got some really great volumes in the last 3 weeks. So there is a possibility that this week was just a pause, and then we could still rise up. Having said that, this is sort of what should I say? Definitely an iffy situation. There's been a big fight between the bulls and bears this week, and looking at the size of the Rickshaman Doji, which is almost from 8.9 to 8.7, a 200 point fight, up down, up down, up down. That's quite a lot of volatility and war for what is bound next. So at best, we would say, an uppish bias. There is definitely a chance that the new life high, or rather at least the old life high, would be touched upon. So in a sort of multi-week basis, the bias is definitely up. In terms of the daily charts, there is definitely a bit of a concern. You've got this big red candle. However, this uptrend that started in mid-Jan, or rather late December, with a nice double bottom, is sort of intact, sort of has been reacquired, if we can use that word today. And it'll be interesting to see what happens next. In the one significant or one notable point in the MACD is that we have a MACD crossover, negative MACD crossover in the daily charts, and that has actually happened at a almost a high level. If we go back into the past and use this as a reference point, you will see that the MACD was here previously when it went to a life high. We are in a sense, there or just about there on the MACD. So in a sense, so strictly speaking, on the corrector, in a sort of mega overbought zone. So you have a mega overbought zone on MACD. You have a flat RSI on the RSI daily, and you have an MACD crossover, negative crossover. So at the very least, we would say that the bulls are becoming a little weak, definitely weaker. Right? All right, so that's the NSE 50. And before sort of coming to a more clearer view or a more probabilistic view, let's look at what's happening in the global markets to give us a quick sense of how we are stacked against them. So in this chart, you should be able to see the Dow Jones, and the Dow Jones. So okay, so not yet opened actually. It's another 17 minutes to open, so we'll just move on. You can see, 1, 2, 3, 4, 5, 6 clear bullish candles, Marubozu type candles, which is really interesting. And we've gone to 20,600 and then sort of come to a pause yesterday with a doji there. So the Dow Jones has basically gone from 18,700 to 20,700, almost 2,000 points in from November to now, right? So November, December, January, February. So 3.5 months, almost 12, 13%. That's, I think, by any standard, a mega move in the US markets. The question is now, how can it sustain that, and how strong is it in terms of going up? Right. So still strong, I would say. You can't looking at it on a weekly basis. What you can see is clearly strong bullish candles. So no sign of weakness at all, and looks like on a longer term basis the US markets are headed up. Longer term as in multiple weeks as of now. If you look at the S&P 500, which is more or less a similar copycat picture, weekly chart looking very strong, no sign of weakness unless today something in Friday US happens. And on a daily chart too, it is definitely quite strong. So both the wider market and the local market and the narrow market in the US are showing tremendous strength. DAX, Germany, so that's sort of done a double top, right? We were talking about an uptrend last week, but looks like we sort of hit a level there. So we'll have to wait and watch and see how that pans out. Let's see. Right, so we'll come to that 11,900 mark there for sure, and wait and pause looks like happening there. So we'll keep that for future reference. So nothing really in Germany to say that it could be going up further. So it could be consolidating. I don't think we are really headed down though. FTSE, so FTSE more or less similar picture, except that relatively speaking it is weaker, FTSE compared to DAX, right? So here made a new life high that time, and we just have to wait and watch and see how this one pans out. So FTSE could be on the way to make a new life high. Just wait and watch. Pause. CAC, not bad. Not bad because wasn't expecting CAC to actually sort of show strength after many months or maybe even years. This CAC is showing mild relative strength compared to the DAX or even the FTSE, right? And just wondering what is sort of cooking there. It has definitely come to an important level, the CAC, 4,900, and would be more of a consolidation than on the weekly chart looking more like a consolidation to me, and this might even be definitely premature. This could even be a sort of flag that has formed here, right, and perhaps broken out, which means 4.5 to 4.9, that's 400 points. That's quite a bit of a move. 300-400 points could be expected on the CAC France. So that's definitely impressive. Let me go back and see DAX that way. Notice that. So okay, looking at a bigger picture on DAX now. Looks like a new life high on DAX is a real possibility. So DAX new life high possible. CAC showing strength. FTSE also new life high is quite possible, and all the US indices are definitely showing good life highs. So, and coming to Japan, Nikkei, the data. Okay. Right. So Japan seems to have broken out of a symmetrical triangle. Looks like it's doing some consolidation testing, and then could go up further. We'll have to wait and watch on that. All right. So this is interesting. So US global markets are looking quite bullish, in my opinion. Therefore, I think save the election stuff in India, Punjab, UP, etc., sort of coming to almost the second half of that electioneering, the election phase. 11th of March should be the results, so that will definitely be interesting to watch. So let's see how that goes. Right. So definitely quite a healthy bullish sign in the US markets and European markets, and I must say should sort of have a spillover effect on India. So it looks like in spite of all these bearish candles that we are getting, we could actually be more primed to go up than to go down. But having said that, some are still a little cautious. I think maybe the market wants the election event to be sort of taken care of, and then we'll see what happens next. The Nifty Junior, or also called the Nifty Next now, that's still showing strength, interestingly. So clearly the mid caps and the small caps, I think perhaps showing a lot more spunk than the large cap space. Let me see if I can get yep. So there we have the BSE small cap index, and if you look at it, wow. So the small cap index is one thing which is really struggling. 2008 level has still not come. And that was the 2008 level for the small cap index, and that is clearly, just there. Just about every other index and market has made its life highs many times over after 2008, but the small cap index is clearly not matching up, and it may do that now. We'll have to just wait and watch, and if it does that, maybe small caps that would really go up from here. All right, so that's interesting. Really something that we should probably look at more in detail in the days and weeks to come. Okay, the CNX 500, right there. Okay, interesting. The CNX 500 has made a sort of life high, right, in that open today, but not been able to sustain it. So the broad market showing definitely some sort of strength. Coming to the sectors, we look at the bank Nifty. So the bank Nifty clearly making a new life high today, making even almost a closing life high. We say that. So close here was 20,406.9. It close here is 20,551. Yeah. So 100-point new life high being made on the bank Nifty. Be interesting to watch what happens from here. So a sort of double or triple top that has been broken out. One set of tops there, and then we had a sort of flag here. Let me clean that up. No longer required. And then here going up, flag, flag target almost reached in today's high, looks like, but then there's this gap here, looking like a sort of runaway gap right now, or rather an exhaustion gap. So let's put that and leave that as a mark. It will be interesting to follow this up. Right. Right. So leave that. See, of course, one of the reasons why the bank Nifty went up so much is HDFC Bank FI limits relaxed by about, not relaxed, 2% headroom became available. And because of that, the market went up. The HDFC Bank shot up, I think, 3.5% or something like that. Right. So that's to be kept in mind. So that's the bank Nifty. Okay, so looking at the bank Nifty exhaustion gap, it's best probably to wait and watch for the coming week on this before one trades. Could be a little, not little, I think quite dicey. On the one hand, we do have a important new life high sort of being created, but on the other hand, we could be sort of seeing some at least short-term weakness. So this is where it is. Okay, so 21,000 there. It could. I know someone is getting a feeling while looking at this chart that in the longer term, this is very likely to just go up. The weekly charts are looking quite strong, except today sort of a weak shooting star, I would say, but really nothing more than that. So this is the bank Nifty. Coming to the PSU banks, Interesting. So PSU banks not showing the sort of strength at all that the private sector banks are showing categorically. So you will remember the private sector banks mostly represented in the bank Nifty. Where is that? Yeah, those on the daily chart, huge gap up and then close. Even though it was mostly on SDFC Bank, it was a one-off thing. But the PSU banks are clearly uh, showing weakness. Have come back to an important support level after some really big moves in the last 1 or 2 weeks. So this support level is potentially a a good one to go long on. One will have to see how this behaves. A lot of red as is obvious, and all right. So a strong breakout followed by a correction. Looks like this correction is not really over right now on PSU banks. So we'll have to wait and watch. No long, no short trades in the PSU bank space, at least as far as the index is concerned. Coming to the other sector indices, interesting. So we have the big gap up, but that's obviously not happened in uh, the auto space. You can clearly see that the auto space is having weakness. This was on account of Tata Motors' big 10% fall because of a 96% drop in profits 3-4 days back. So interesting that banking index basically driven by HDFC Bank today, and 3 days back the auto index basically driven by the one single stock Tata Motors. Right? So not much strength there as we can see on Tata Motors. Right. Uh, let's see what that is. Consumer durables. Interesting. Consumer durables really showing strength. That's, uh, that's definitely heartening, I would say. So those have clearly made a new life high and continue to, rally up. Massive, massive mega overbought in the MACD on the consumer durable space. So wondering how much more this can last. But yes, definitely strength there. Capital goods, similar picture. It's like more wanting to go up than go down, I would say. So is there a recovery of sorts in capital goods? But everything is, in MACD negative crossover. So that's definitely a concern. But this is the first weekly red candle after several weeks. Okay. Right. So we were looking at capital goods. Capital goods. So first big, not big, first weekly correction after almost 2 months of an up move. Has come to a resistance zone, and I think in the longer term, looks like more like it will probably go up rather than go down, in my opinion. So maybe the next week is also a rest week, and then after that we'll perhaps see more up moves. FMCG, so clearly FMCG has put a double top in place, pretty good one at that in my opinion. And again, MACD crossovers, weakness in RSI, stochastic, everything. And probably maybe coming down to something like around these levels. Yeah, 8,700, not very far from that. And what's also interesting to note is we've got a hammer candle today. We had a inverted hammer 2 days, 3 days back. So whether some correction is coming to an end, we'll have to wait and watch. But given that we're an MACD at such a high level, I don't think that's going to be necessarily a short move. Can bounce back, yes, but again, no meaningful correction. Look at this. This is the daily chart of MACD, and right from this day, that is 27th of December, more or less gone up continuously till 2nd of, or rather, sorry, 7th Feb. It's only after that there's a sideways correction. So it's definitely a correction for now. It's not really a downtrend, and all the trends seem to be sort of, in a sense, at a pause or at a correction. Aha, interesting. Healthcare has bounced up. So playing the typical historical game of defensive play, and the rest of the market goes down. Pharma, healthcare tend to become defensive plays. Now, whether this is a defensive play in terms of just because of the other sectors being weak, or is this a play on its own merit? And we are seeing a sort of revival of the fortunes of pharma companies. That will really be interesting to watch. So still some hope in pharma. That's for sure. No doubt about that. We've got a sort of uptrend here. Higher tops, higher bottoms. For what it's worth, really mark that and keep. Okay, very tempted to say this is a sort of triangle, but just wondering whether it's a little premature to, or improper rather, to put it as that. Yeah, well, it looks actually like a very definitely a triangle. Yeah. And if you're breaking out, then that will definitely be interesting. This is weekly chart, pharma. Okay, on the weekly chart, one thing to note on pharma is strong lower candles, lower shadows. So there could be a sort of base that is having formed around 14,000, 14,100 on the pharma space, and sort of 2-year down move has it sort of come to a pause, a halt. It'll be interesting to track this. Okay, so pharma yesterday and today, very strong Marubozu candles. Then IT, so IT is made a sort of comeback of sorts. You can see it's broken all the long-term moving averages also. And then today has been a pretty good and significant dark cloud cover. And it's come to a resistance of 10,700 and then moved down. Interesting headline talk that Mukesh Ambani gave at I think the NASCOM Leadership Summit, where he said that the restrictions that America will place under Trump on H-1B, etc., could be the best thing that has ever happened to the Indian IT industry, and an opportunity to create the biggest digital market in India. And made a sort of political speech saying, we cannot do it alone. No one company can do it alone. It would be good if companies came together to make that reality happen. So that's going to be interesting to see how that pans out. So let's see. This is 1,700 at the important resistance level. I would definitely be looking at long on IT and Pharma. Both of these two are sort of negative, and these two are now showing strength. That's definitely a turnaround of fortunes. Looking at metals. So you remember we were talking about this metal rounding top. It hasn't definitely broken that rounding top. It hasn't broken the neckline, but it will be important to watch that neckline and see how this really moves. If this rounding top comes true, then we could see a pretty, I would say, a fall of at least 500 points, 3-4%. So about 11,000 should easily happen. On the weekly chart, looking more like a evening star pattern on a weekly chart. So let's see how this pans out. So metals weak. Let's look at power. Power doing quite well, looks like. But that's also got an MACD crossover. So power 2,200 crossed, resistance crossed. Yeah, probably going to go up to 2,400 or higher. Definitely possible. There's some data missing here. I should check that later. Okay. Reality has slipped and showing relative weakness, MACD crossover. But reality is very, very close to its multiple long-term moving averages. Unlikely that it's going to sort of, break down on that right now. Reality, I would say, as an industry, as a sector, undergoing some sort of a consolidation, some sort of, the weaker players, definitely getting out of the system, and then you'll probably definitely see a lot more strength that is going to happen in the coming quarters and years, I think, on the reality side. Right. Look at that. So suddenly I remember we talking about reality forming a multi-year bottom, and from where could perhaps get multi-bagger returns. 1,700 to 1,500 is not really 1-2, not multi-bagger yet, but if it goes back to 5,000 or something from here, 300% returns are quite possible in the realty space. Looking at infra, so infra, power, sort of all in the same bucket. Core, heavy engineering, manufacturing, but this is also so even though it's showing green candles, it's really not yesterday and today green candles really not showing any significant strength. Okay, so what is the overall view of all the sectors? I would say except for IT and Pharma, which are looking quite bullish with nice strong setups on the indicators also. All the other sectors have done MACD crossover this week, and while that's not necessarily a 100% evidence that it's going to go down, I think it would more be corrective or a sideways move rather than a bullish move in spite of the Nifty having gone up. So if we look at Nifty again, like I reiterated, globally looks like it's all up, and 9,000, 9,100 could happen, but it's sort of after a big gap up, this sort of red candle today, bit of a concern, and might be getting a little top heavy. The biggest push is the fact that all the European indices and the European indices not yet, but are well on the way of probably making new life highs. US is definitely doing that. Nikkei has broken out of a symmetrical triangle. So all these are positive, I think, pluses for the Nifty. On the sectors, what's pushing it up is IT and Pharma. Everything else is sort of dragging it down. So it's a dicey thing. So I think you're good for trading opportunities to trade when you get the opportunity, but it's a little premature to say whether correction is coming or a new life high is coming. My bias would be that a new life high is coming, but it might be very, very short-lived. The Bank Nifty definitely had a new life high. That's on the closing basis. But do we have an exhaustion gap here is my question, because the way we gapped up and then really got beaten down after that. This is probably, like I said, because of HDFC Bank specifically. We'll look at more in detail on that in the part 2 of this IMR. So in terms of levels, I would say Bank Nifty, if it closes around 20,300, 20,350, makes a base there, and then turns around, we could definitely see Bank Nifty making new life highs. It's broken out of a sort of triple top, please note. So that's very, very significant. I look at it on a weekly or look at it on a monthly basis, and which is something very rarely we do. Monthly charts, we can see that, right? So double top in a sense broken out. Don't want to put too much emphasis on that on a monthly basis. So we are just sort of there and seem to be just toying with what to do next. But my sense is it's going to go up. So those of us who can afford or have the strength to have, I think, positional multi-month futures contracts or trade appropriately with options, one could look at the Bank Nifty, not from a daily or even weekly basis, but more from a 3 to 6 months out basis. Right. Okay, and on the Nifty, new life high is possible. I would not be short on the Nifty right now, unless specifically it were to break below 8,720 or even 8,770. If it breaks below that, then that would be where I would short, but otherwise 8,720 is one level to watch out for. Till then, long, and if this gap in the Nifty also closes, then still would turn back up. So going with the old adage about a trend once in place tends to stay in place till some external force. Now the external force, I think that we have to be really careful of and watch. One is the Tamil Nadu politics sort of over in one chapter at least. It will be interesting to see what happens next. But I think the other one is the national elections, and we'll see how especially the BJP fares in all these 5 important states. And if they come, it's probably sort of a rally of some sorts. The demonetization, etc., will be a thing of the past, and the public would have forgotten it in a sense. But if they don't, and the market turns down, then perhaps much lower levels are in the reckoning. Okay, so that brings us to the end of part one. And in part two, we'll look at directly some movers and shakers and sort of change the format a bit and introduce more variability and jumping from one stock to the other based on some scanners and filters that we can look at. Right, so great. So this brings us to the end. The recording should be up hopefully by lunchtime tomorrow, and you should receive the link by then. And those who are online, just hold on, and you'll receive the link for part two in a minute or so. Right. Thank you, and good night, and have a great weekend. And like I said, hope you, like quite a few other folks, had a wonderful week in terms of profits. Hope the next week is also as profitable. Though right now, looking at what we saw, might be a bit of a challenge to replicate the success of this week next week. All right, bye.